What's going on, traders? Before we get into today's video, I want to reiterate that I am not a financial advisor. The ideas presented throughout this video are my own personal opinions and what works for me. You and only you are responsible for the financial decisions that you make in these markets. And if you do want to seek a professional, you should do that, especially when it comes to longer term investments. What we do here is a little bit of day trading, especially this week with it being the last main week of trading Forex. We've had a lot go on, so enjoy today's UCAD price action study. And make sure to smash that like button if any of the videos this week, any of the reviews, the before the week, midweek, and even this video, if you know that you're going to get some value from it, smash that like button for me, subscribe, and let's get into the video. Okay, so right into Thursday morning's price action recording. Now, this is the paper trading account on TradingView. This is not my live. And as you can see, we had just entered this buy position at about 126.94. Stop loss at 126.88. So risking about 6 pips on this buy position for UCAD. Now, the reason for entry, as you can see that black line, is that 4-hour 50% that we've been looking at all week. And the cool thing is when we traded into that 4-hour 50% over there in the blue box, we left a new area of imbalance. So as the market had come and purged this pre-New York liquidity, I pulled the trigger at 9:42, a little earlier than I like to pull the trigger. There was a better entry at 10:15, but we'll get into that later on in the video. Again, same 4-hour 50% we've been talking about all week. So the proper stop loss, you could place it right up underneath those previous lows in the blue box, right at 126.88. Now, I'm pointing out that imbalance that was left in those 15-minute candles over there. So again, just a beautiful place to be able to position yourself, especially since we're only risking 5 to 6 pips. And now you just want to wait, right? You want to make sure that these 15-minute candles are going to continue to show bullish momentum going in. So we're going to dive in, look how fractal the market is, right? Pre-New York buildup, we show signs of bullishness into that last up candle, and overall trade back down into our area. Now on the 1 minute, I'm really just going to show, that rejection. We entered on that last down candle, and that's exactly what you want to see, giving possible areas for it to come mitigate those smaller time frames. Now, these are very sped up. This one's in about 20 times speed. We're just waiting for this last 15-minute candle of the 9 o'clock hour to go ahead and close. I point out our first scale at the 50% of that last up candle there. And again, 27.20, that's about 25 pips, risking 5 to make 25. That's exactly what we want to be looking for when we take these kinds of entries. So again, it is very, very sped up. We're getting evidence of the reaccumulation on smaller time frames. As you can see, we come mitigate the 50% of that 1 minute candle. Now, here's where I messed up. I moved my stop loss from 126.88 to 126.92. Didn't really need to do that, but I'm going to tell you guys why and show you later on in the video. Pointed out some 1 minute imbalances that come before that first scale. So even if you want to scale before 20-25 pips, this is where the market's going to show rejection. That last up candle, small imbalance, and then as we get closer to that first scale, another imbalance. So again, just showing you guys that's exactly what you want to look for. We see that bullish momentum coming off of our reaccumulation structure. And that's literally everything that we want right here. You couldn't ask for more. Again, the only thing about this entry is that it wasn't between that last 15 and first 15. And because I entered early, that's what pushed me to move the stop loss up a little bit and ultimately ended up stopping me out. So I couldn't show you guys as we moved into that first scale and second scale, but we are going to go over that as soon as this recording is over. Again, this is exactly what we want to see, reaccumulation in a higher time frame, key level 50%. I show a little drawing there, and I'm going to flash up a picture, right? That early 9:41 a.m. entry, if I would have kept the 6 pip stop, it would have been great, but because I moved it, that proper 10 to 10:15 entry is where you want to position yourself most of the time, and we've traded up to 1.28. Now, before we go into the rest of Thursday and Friday's bullish price action that, as you can see, we traded up into the 2,800 level and never came down into that stop loss, I want to show you guys why that 4-hour imbalance was so key. And even with the bearish dollar this week into the price level of 90, which I'm pretty sure is where we're about to end the day. Yep, pretty much right at the price of 90. I want to show you guys why this just made so much sense. So we're on the daily. This was last week's low. Okay, this daily candle right here, as you see, the market opened in this blue box. This is last week's low. So we have no previous structure to the left side to know where we want to play off of. Bearish dollar, bearish UCAD. Where could we see this market go to? So what we want to do is scroll all the way back. We want to look left to get right, and we want to go see what kind of price action lies below this last week's low. Now, as you see, last week's low actually lies right here in between an imbalance on the daily chart, and it's actually right near the 50%. Now, again, this was hit last week, so I'm not really worried about this daily imbalance anymore. We can knock it down into a smaller time frame. No imbalance here, no imbalance here. So what we want to do is now look at this price action on a 4-hour time frame. Okay, so we're going to scroll all the way back. This is all the way back in 2018, April of 2018, I'm pretty sure, right? Cool, perfect. So you guys can see how beautiful this accumulation structure was, right? Pool of money, one candle below, evidence of trading back above. We come back down, mitigate the 50%, trade back above, come back down, mitigate the open, trade back above. And now, other than this 50% that didn't really get tapped, the only imbalance that we have is this imbalance right here in this very bullish closed 4-hour candle. And as you see, last week's low actually created an equal area with this wick. So technically, last week's low ended up being a pool of money right here. Okay. So now what I'm going to do is I'm going to go ahead and grab my imbalance tool, and we're going to go between that wick and this wick, right? The imbalance of here, all this body of candle to here. And as you guys can see, the 50% is right there. 50% is right there. I'll go ahead and make that black so you guys can see it a little bit better. And this is what we were looking at. As you see, 26.92. Now, I can't go look at this price action on an hour chart, or else we would go inspect what the imbalance would be on there. But this is what I had to work with. So now that I've done look left to get right, now as we go into this week's price action, what is the story that it tells? Market opens, right? Let the market do its thing Sunday and Monday. We trade lower. We pretty much make an equal pool of money here, right? An equal pool of liquidity, that low side liquidity that they built to start the week. Go ahead, throw my template up there. Then what happens? They immediately trade up above. Again, you don't really need to be in the markets Monday. They trade back above, make an equal pool of money up here. And again, our bias was a bearish dollar. So as you see, through Monday and Tuesday, the market traded down into that overall 4-hour 50%. Now, again, I did get caught up a little bit trying to catch a buy position up in here, but not really worried about that loss because of the beautiful plays that we got off this 4-hour structure. What happens when we get there on Tuesday? Now, this happened at 3 p.m. So this wasn't the cleanest entry off the initial push into the 4-hour imbalance. What do you let happen? You let FOMC run the dollar back up bullish, create, right, more liquidity to the upside. And then again, our bias dollar let us run back down into that imbalance. Now, as you've already seen, when we hit this the first time, we created another smaller time frame imbalance to play in here. And that's what was so key about Thursday morning's entry right here. So now we're going to go down to the hour chart. And as you see, again, market has traded up and effectively above 2,800. Right? What do? Liquidity. We trade into it at 3 p.m. That's not the entry we want. We let it happen. FOMC candle runs up, very manipulative, gives us an equal pool of money here. Then as we trade back down, right? This is all that pre-London and New York buildup, right? Liquidity high, liquidity low. And then as you see, what did we get? We got a dip down into that 50% again, and we traded back up. So I'll keep knocking down time frames for you guys, and we'll go over all of it. All right, so let's go ahead and clean this up a little bit. Before we go deeper into the smaller price action, we'll delete last week's low. We'll go ahead and delete that overall bigger 4-hour imbalance, and we'll delete this smaller one so we can make a proper one. And I'll leave the 50% here. We'll go ahead and just say 50% 4-hour. And we'll do bottom center. Cool. So there's that 50% 4-hour. You can see, boom, boom, boom. Now, as you can see, the 15-minute imbalance only lies about right here. We'll knock this down on a 5-minute time frame and go over the entries inside of here. You did see the screenshots earlier in the video. But I want to talk about the targets, right? If we're looking to enter a trade, right around this 50%, have a stop up underneath the low, right? Risking about 5 to 6 pips. What are we going to target, right? A 3 to 1 is even just right here for about 15 pips, but we're looking for a little bit more than that. So as again, just like we looked left to get right on the higher time frames, we also have to look left to get right as we're moving to the upside. So as we're inspecting this price action, we just want to see, where do we have liquidity? Where do we have imbalance? Where do we have institutional candles? So I'll blow it up a little bit for you guys here. And let's dive into it. Well, if you wanted a first scale, it could be this last up candle, right? Up candle, down move, liquidity, imbalance, 27.10. That is your 3 to 1 ratio, right? If you wanted a second scale, right? Maybe it's this little imbalance in here, right? Maybe you want a third scale. It could be this imbalance in here, right? Maybe you need a fourth scale. It could be this imbalance in here. So you guys have already seen these on the previous charts. I just wanted to walk through it so you can see where my eye was magnetized towards. So here are pretty much the areas: scale 1, scale 2, scale 3, scale 4, or 1, 2, 3, however you want to do it, right? That initial take profit that I put on the trade was at 35. So it was right here at the 50% of this imbalance. And again, as you guys see, I mean, everything just plays perfect. And again, it's not me. It's the institutional order flow. This is how the markets work. And after you train your eye over and over and over again to seek out the imbalances and seek out the institutional candles and play higher time frame biases and play, whole levels, 1.2700s right here. It's not always going to be perfect spot on, but it is a key level. And again, it just really brings everything together for you. So again, there's the targets to the upside that we would look for. So let's go down into a smaller time frame. Let's see what this imbalance would look like on a 5-minute chart. So we're going to pull back. We're going to dive in, right? Let's go ahead and delete what we got here. And let's go ahead and make a new 5-minute imbalance. So candle wick there, all the way down to this candle wick here. And as you see, we got that last down candle before the up move. So let me go ahead and just mark off the open of that, right? It rises right there at 26.90. Now, as we scroll left, again, what do you see, right? And actually, let me put the stop loss on here too. Throw a little red line right there at 88. Right, so as you can see, again, the stop was never touched, and we were able to see that bullish rejection, right? What do we trade into, right? Here's pretty much your 3 to 1. Your first scale is going to be right above all of this money, right? As we trade into this imbalance, into the open of this up candle, right? What do you see happen? It's so beautiful, right? So up candle, what do? We throw a wick up there. We trade into it, 27.27. We trade back down. And again, the market just continued to trickle. So for the rest of Thursday, what did we do? We then approached the imbalance, and that's where we, initially saw that rejection, right? If you need to reposition yourself in any buy positions, 50% of the candle, boom, and you're taking off. And again, it was just all bullish structure to end off the week here on UCAD. As you see, what do we go reach for? We reach for this imbalance, and then ultimately we trade all the way up into 2800. What happens when we get to 2800? They're going to show evidence of an institutional move near that area to, again, fake out most people. Again, we're nearing the end of the day, so hopefully nobody's trading at this time. After 12 on Friday should never be a time that you're trying to get into the markets. But again, just very, very beautiful price action, and everything just played out so well on UCAD this week. I hope you can use this and rewatch this video over and over and over again. I mean, it's not often that it is this beautiful when it comes, especially to UCAD. I don't trade UCAD a lot. You guys know G used my pair, but just very beautiful areas that you could have positioned yourself here. Again, let me just go down to the minute, and I'll show you guys how those 10 to 10:15 entries could have been a lot better than that entry that I took. So as we dive into here, or again, you keep this entry, just keep your regular stop. That's all it is. I just moved my stop a little too early. As you see, they dropped one candle in, they trade back up. They had to give one more real close to it, but either way, you saw them staircase it back up, right, off of this, and then they trade higher, and then what do? They staircase off of this, right? And then they trade higher. And then what do? They staircase off of this. And it's just the same thing over and over and over again until we reach those targets. What happens when we get into the targets? Look, rejection near the 50%, sell off a little bit into the last down candle on the minute, right? And this is all smaller time frame work, right? You're not entering any of this unless you have that higher time frame bullish bias, right? What do? Trade back up, trade back down, and again, just the market repeating itself over and over and over again. So I don't want to go too deep into those smaller time frames. Honestly, you guys, especially if you're new to trading, especially when it comes to institutional concepts, I mean, you got to see this over and over and over again. And what has allowed me to see the markets, this well on the charts is because I lost in retail for 2 years. Like, you have to understand that, like, I came from a place where I was letting this stop me out over and over and over again. As soon as I see this, it just put all things together for me. So I hope that what I'm sharing on this channel helps you. I hope there's other channels that you'll be following along with. And then I guess one more thing that I didn't go through, and this is for the trade management part of it, which I'm excited to get more of those live paper trading analysis for you because I can show you how you move up your stop loss. But just like I showed you on the 1 minute, right? As we make a new, and just like I tried to do here, and that's the thing, like I tried to move my stop here, that's what you do. Your stop initially starts right here. As you trade higher, you can move your stop then to here. And then as you trade higher, you could then move your stop into here. And again, it all just depends on you. Where do you want to continue to minimize your risk? As we trade higher, you can move your stop into here under this. So that's all it is, just moving your stop as it makes that next level up. So I appreciate you guys for checking out this channel. Again, 55% of people that are watching my videos aren't subscribed, so click that subscribe button if you'd like to see future videos. We're going to be doing a lot with the indexes. My cat is knocking ornaments off the tree, so I'm going to go tend to him. Subscribe to the channel. Make sure you give it a like. Appreciate you guys. Happy holidays. Merry Christmas. Let's get it.